Did you guys get your free stocks yet? Probably not. If you didn't, it's linked down below. The link's from Moomoo. All you have to do is deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Literally free money, guys. Link down below. And now let's talk about the markets, the Fed, a couple of earnings reports from different companies, and we have to break down my thoughts on everything. So hit the like button, subscribe. Let me know your thoughts down below in the comments. And now let's get into it. So the markets closed pretty all over the place today. We had the S&P 500 up 0.1%. The Russell went up about 0.15%. The NASDAQ went down 0.1%. And we had the Dow as well down closer to 0.2% as the VIX went down about 5.5%. And we had the metals up, gold up 0.7%. And we had silver up about 0.9%. And today was pretty slow. If you guys take a look on this intraday chart, we were selling off in the pre-market and at market open, and then from between 9:50 a.m. on the East Coast up until about 2 p.m. when the Fed minutes came out, the markets were literally flat. SPY was trading right around 442, 443. Triple Q was trading right around, let's say, 350 to 352, pretty flat for a good 4 or 5 hours. And then once the minutes came out, the markets realized nothing really new is going on. They're not getting any surprises in terms of inflation, jobs data, rate hikes, tapering. Nothing really new came out. So the market really just rallied in a sigh of relief. Pretty much like, okay, the minutes are out. Nothing crazy came out. Now we have to look forward to the next Fed meeting in March, which between now and then, we have a couple of weeks. So who knows? Maybe the markets do ease up on volatility heading into that meeting. Maybe we do get some green. That's kind of what the markets, in my opinion, are feeling right now. And we'll talk more about that, of course, as we get closer to the Fed meeting. And if you guys take a look on this 5-day chart, this is a pretty good sign, at least technically speaking, right? SPY broke out of the highs from pre-market and from yesterday. So that's a good sign. We hit a higher high on SPY. And let's see if Triple Q did that. Let me pop it up. Triple Q, it tried breaking out of the highs from pre-market today at 357, but it didn't do that. So that's what I'm going to be looking for probably tomorrow. I'm going to put my alert at 358 on Triple Q and see if we could get some momentum out of there. And you guys already know at this point, I've been saying this for days. On the 20-day chart, both of these ETFs, Triple Q and SPY, are trading under their main moving average, which is not good. But now that we have the minutes out of the way, we have a couple weeks till the next meeting where the Fed is potentially going to do a rate hike. They're probably going to do a 25 basis point rate hike, and we're going to get the tapering to end. So we're going to see how it plays out. Do we run into that meeting? Do we end up seeing more volatility before the meeting? It's really up in the air at this point. So I have my alert at 358 on Triple Q. I might as well do one on SPY, and let me do it at let's do 448 on SPY. If that point's able to break, maybe we can start reversing, maybe before the meeting in a couple of weeks. That's definitely in the cards. So what do you guys think? Drop me a comment. Make sure to hit the like button. And we haven't done a like button challenge in a long time. Let's try and get at least 150 likes on this video. Can we do it? Can we do it? 150 likes. I challenge you guys. Smash that like button. And now let's talk about some earnings. And some of these stocks are getting destroyed. Number one is Shopify, SHOP. Shopify today alone went down 16%. Its low of the day was $720. And to think just a couple of months ago, just 3 months ago, this stock was $1,700. That is insane. So it went from $1,760 to $720. That is a drop of 60%. You heard that right. 60 percent of a drop. So well into a bear market territory. We're talking depression status at this point. This stock is not in just a bear market. It's in a straight up depression, 60%. That is unbelievable. So what happened with Shopify here? Number one, they did Q4 revenue of $1.38 billion, so that came in, all right. They did adjusted EPS of $1.36, so about $1.36 adjusted. What really went wrong for them, in my opinion, is their growth, their projected growth for full year 22. It's going to be lower than what they saw in 2021, where they achieved about 57% revenue growth. So that's not a good sign. That's a sign that we are slowing down. Shopify is, not me. I mean, I don't know Shopify. Maybe you guys do. Let me know in the comments. But that's a sign that Shopify's growth, at least now, is slowing down in the very short term. Now, is this going to be a long-term concern? Guys, nobody knows, first and foremost. That's number one. And number two, we've seen this happen with growth stocks in the past. We have a growth rate 1 year of 60%. Maybe the next year it's going to come down a bit to 40%. And then the next year after that, it could be 75%. So what you guys have to realize is growth isn't always going to be increasing every single year in a straight line. There's going to be years where we see a huge spike, like we saw over the pandemic years with Shopify, because everybody was shopping online. People are still shopping online, but it's just a little bit different now. So we're going to see a difference between that initial spike over the pandemic in sales and now when we are, opening up, people are going out more and maybe not using Shopify stores as much. So that's what's going on. It's just a little slowdown, guys. And on top of that, maybe inflation plays a role in this. I wouldn't be surprised if it does. You guys know inflation has been running through these markets. The economy, a lot of people don't have as much money. Their dollar isn't going as far as it did a year, 2 years ago. So people might be cutting back, and that's another sign of potentially a looming recession, which I might make a video on that another time. We're not going to get into that too much in this video, but overall, Shopify is getting destroyed, guys, and their valuation has come down a lot, and I'm probably going to do a deep dive video on Shopify within the next week. I'm going to be working on that soon to put it together for you guys, and based on this 3-year chart, this is simply a pullback, obviously, maybe a little bit more than just a pullback, 60%, but the chart still looks pretty decent. Look, we're holding above 700, above the 180 moving average on this 3-year chart, so let's see what ends up happening here. I wouldn't be surprised, honestly, if it went lower, but honestly, between 500, 600, 700, I think this stock for the long term is a steal. I don't want to say a steal because I haven't done the deep dive yet, so I don't want to just say that without doing the deep dive. But let's just say it's interesting between $500, $600, $700. It really is long term because Shopify is just a great company. I've used it before. I like it. Nvidia, let's see what they did. And this is one that I didn't look at in terms of their earnings. So, wow, look at that. They closed at 265, shot up to 275, shot down to 250. Now they're hovering at about 260, a little bit under where they closed. So let's see what they did. They did about $8 billion, actually $7.64 billion in revenue, adjusted EPS of $1.34, and they posted $1.32 unadjusted EPS, which is compared to the $1.22 estimate, so that beat. And they guided for Q1 revenue of $8.1 billion versus the $7.28 billion estimate, so that's good. Guidance is above the estimate. And let's see here. Gaming revenue came in at $3.42 billion for Q4 versus the $3.35 billion estimated, so that's nice. That's a beat. Data center revenue at $3.26 billion versus $3.16, so that's also a beat. So not too bad. It's very volatile, and like I said with Nvidia, guys, I've said it before, I'll say it again. This is a stock that around earnings season, especially the day or two before, after earnings, it is usually pretty volatile. So don't be surprised if tomorrow we wake up and Nvidia is down 8% or up 10%. It has these wild swings, and once that earnings call starts, which is probably soon, we're going to be seeing even more wild swings. So Nvidia right now is unchanged, but when you're watching this video, it might be wildly swinging in either direction. So let me know your thoughts on Nvidia. Drop me a comment. On the 4-hour chart, let's see here. It is slowly breaking out, but I want to see a definitive breakout above 270 to 280. At that point, I think it really could start gaining some steam, but we're just not there quite yet. Let's take a look at Applied Materials. They also reported earnings today. This is AMAT. AMAT is the ticker. They closed just at about $140 a share today. And let's see after hours. They shot up to about 147, so they're up now about $4 after market hours. So let's see these earnings. They did Bear with me here, guys. Adjusted EPS of $1.89. Sales, they did about 6.27 billion, so they did about 6.3 billion sales. Their gross margin is 47.2%. They see Q2 sales of $6.35 billion. I'm not sure what the estimate is on that. Let's see here. The estimate seems to be 6.4, so maybe they got it a bit under the estimate, but their EPS for the upcoming quarter, the upper end of the range is above the estimate. So not too bad here. I got to dive deeper into both Nvidia and Applied Materials, guys, in terms of their earnings. But look, technically speaking, if we break 147 on Applied Materials here, that's right by the 180 moving average on this 4-hour chart, this thing might be flying. Let me put my alert at 148 right now, 147 actually. If that point breaks, hey, that's a big resistance. The double bottom breakout might play out. And if you guys take a look on the yearly chart, this is a clear uptrend. It would make sense if it played out. So that's Applied Materials. We also have Doordash that reported. Let's see what Doordash did. Holy crap. Look at that. Wow. Wow, guys. Oh my goodness. It was down 7% on the day. This is when I wish, seriously, I gambled on earnings. But it's a double-edged sword, like I say all the time. This stock went down 7% on the day. It closed at $94. Now it's at $122 after market hours. Come freaking on, guys. It's up 30%, 27% to be exact. So, big move for Doordash. I guess a lot of you guys are still using Doordash. I don't use it, but clearly a lot of people are using it based on this big move. So let's see what they reported. Looks like they did negative 45 cents. They lost about 155 million in the quarter. They did gross order volume of $11.15 billion versus $10.65 billion estimated. That crushed. They did revenue of $1.3 billion. Not too bad. Let's see here. 1.3 billion versus 1.28 billion, so that's a beat. Nice gross order volume beat. They lost money, but what do you expect? They're not trying to be profitable yet. So at this point in time on the 4-hour chart, Doordash is actually right by the 180 moving average. Look at that. This rally, it could be a bull trap by the looks of it until we get above that moving average, which you guys can see clearly this has been resistance since the middle of November. 19th of November is the day we dropped under the moving average, and we haven't been above it since. So I'm going to put my alert. I have one at 160, which we're obviously well above 160. I'm going to lower that. I'm going to put my alert right around, let's put it at 128 or something like that, in that ballpark. If we break 128, that's where the real momentum could kick in, and we'll see. We'll see if this earnings report gives it the strength, the momentum to actually start pushing out of that moving average. So what do you guys think of Doordash? Drop me a comment. This one could be a turnaround play. Let's see. Cisco, CSCO, this one's also ripping. A lot of these stocks are ripping, guys, except for Shopify, which we're going to make a video on Shopify, don't worry. Cisco's up a ton right now. Cisco is up, let's see here, we'll talk about that in a second. What did they report for this quarter? Looks like they did about 84 cents adjusted EPS, revenue of $12.72 billion. They see full-year revenue up 5.5% to 6.5% year over year. Not too bad. They see full-year adjusted EPS of $3.41. Not too bad. They raised their dividend, which is nice, by a penny, 37 to 38 cents. And let's see here. It seems like overall they just had a nice, all-around quarter. Growth is expected to continue about 6% in 2021 or 2022 rather. Geez, guys, the years are flying by. And cash and cash equivalents, they have a lot of cash equivalents, short-term investments, $21.1 billion. So this stock is up about $3 after market hours. Nothing too crazy, but it is up about 5 to 6%. Pretty solid. And just like a couple of the other stocks we mentioned, this one is still under the 180 moving average. We are above the 50 moving average. We are at a multi-week high right now, but we're not yet breaking out. We're not yet breaking out, and I'm going to put my alert at 58.50. If we do take that point out, that could be where we do end up reversing. So mark is at or above 58.50. Let's take a look at Barrick Gold. Look at this, guys. Barrick Gold reported this morning it went up 7.5% in one day, which you guys have to realize for a gold mining stock, that is a very, very big freaking move. I mean, that's a big move. They reported pretty good numbers, adjusted EPS of 35 cents versus, actually, I don't even have the estimate, but they did revenue of $3.31 billion. I think they also raised their dividend, and they're doing a $1 billion share repurchase program. That is definitely pushing the stock up. So admittedly, it is a bit overbought. I wouldn't chase it here. And we actually filled the gap from 21.20 roughly to about 22.30 rather. So that gap already filled. To say it's going to go higher in the short term might be a bit too optimistic, I'll be honest. So in the short term, this is probably going to come back down, maybe $20.50, $21. That's where I'm going to be looking for an entry. And sometimes patience is key. Honestly, a lot of the time, most of the time, patience is key. And if we're patient on Barrick Gold, guys, we might be able to get it. Heck, maybe back in the 19s, low 20s on a dip. So, yeah, watch out for it. GOLD. We also had Trade Desk report this morning. Let's see here. They did adjusted EPS of 42 cents versus 21 cents, or actually 27 cents estimated. They did revenue of $395 million versus $389 million. So, double beat for Trade Desk. And look at this intraday move on Trade Desk, guys. This thing has been crazy all over the place. It was at $91 pre-market, right? We shot down to $71 when the market opened. So it went right into a bear market from $90 to $70, 21% drop. And then we ended up running from $70 all the way to $80 a share. So then it ran up 13% from that 20% drop. So very volatile stock today, guys. And what I'm noticing is on the 4-hour chart, a clear-cut inverse head and shoulders. Just look at it, guys. Look at this thing. Left shoulder, head, right shoulder. We're above the moving averages. We're holding the neckline as of now. So as long as we hold the neckline, as long as we're above these moving averages, I think this is going to explode. I'm going to put my alert at $85 per share, which generally over the past couple of weeks, more like 1 week, it's been resistance. So if we take 85 out, that right shoulder is going to start moving, and we might complete anywhere from 100, 110. That is where this thing could be going. So overall, those are some stocks I'm looking at, some thoughts on the markets, some technical breakdowns. If you guys enjoyed this video, hit the like button. Again, I challenge you, let's try and get at least 150 likes on this video. Subscribe, drop me a comment, join my Patreon if you guys want all my buy, sells, call outs, morning update videos. That's linked down below. And don't forget to get your free money from Moomoo. Get your 5 stocks, each of which could be valued up to $3,500. All you have to do is use my link down below, deposit $100, and you get your free money. So get your money, link down below. I'll catch you guys in the next video. Peace out.